Money Talks, I'm Cathy Yang, your intel on the Philippine markets and the economy. In the headlines, the Philippine Purchasing Managers Index has come in at 52.9 in January, higher than December's 50.2. Jing Pan at S&P Global Market Intelligence joins us live from Singapore. The government spending on infrastructure down for a fifth straight month in November. And the Philippines ASEAN Business Advisory Council says it is aiming to seal deals in agriculture and electronics during the country's ASEAN chairship this year.
It's imperative for us from the government side to show their sincerity in rebuilding the trust of the business sector.
An excerpt of my thought leaders interview with ABAC chair and member George Barcelon later on in the show. The Philippines manufacturing sector kicked off the year on a stronger note, with factory conditions improving in January. Data from S&P Global showed the Philippine Manufacturing Purchasing Managers Index climbed to a 9-month high of 52.9. That is up from 50.2 in December, signaling solid expansion. S&P says the pickup was driven by stronger output and faster growth in new orders as demand improved both locally and overseas. New export orders also expanded for the first time since September. Confidence, however, took a hit. Business optimism slipped to its second weakest level on record as firms flagged lingering uncertainty in key export markets, despite hopes that demand will continue to recover. Government infrastructure spending fell a fifth straight month in November, extending a slowdown tied to the flood control corruption scandal. Data from the budget management showed state spending on infrastructure and capital outlays plunged over 45% year-on-year to 48 billion pesos. November marked the fifth consecutive annual decline since July, when spending slid after corruption allegations linked to flood control projects surfaced. The controversy has since triggered investigations, leadership changes, and tighter project scrutiny, slowing approvals and disbursements. The DBM said negative growth in the DPWH persisted amid the probe, curbing project execution and prompting contractors to rush billing submissions as controls were tightened. From January to November, total infrastructure spending fell 16% to 991 billion pesos. That's only 65% of the government's 1.5 trillion peso full-year program. Headline inflation likely stayed flat in January. That's as lower power rates and easing vegetable prices tempered higher food and fuel costs and a weaker peso. A Business World poll of 18 economists pegs January inflation at 1.8%. That is within the Bangko Central's 1.4 to 2.2% forecast. That's unchanged from December and slower than 2.9% a year ago. If realized, this would mark the 11th straight month inflation stayed below the central bank's 2 to 4% target. The Philippine Statistics Authority will release official January inflation data on February 5th. With inflation subdued and growth slowing, expectations for another rate cut are rising. The Bangko Central Governor Eli Remolona said a further reduction is possible if the slowdown is demand-driven. The Monetary Board meets on February 19th. Joining us now from Singapore for a deep dive into the PMA data out earlier this hour, Jing Pan, Economics Associate Director at S&P Global Market Intelligence. Good having you back here, Jing. Welcome to the program.
Good morning, Kylie. Thanks for having me and allowing us to bring you the latest numbers again, which, as you mentioned, is pretty on the rosy side.
It is rosy at 52.9. So what drove that?
Well, first of all, I just really want to remind everyone that the headline number is made out of 5 different subcomponents. And as you alluded to, the number itself, or being the 9-month high, I think it's important to point out It's contributed to by an array of factors, including a renewal in terms of growth, which by that we mean above 50 reading for both the output, which is production related, and also the new orders demand indices. So what we have seen is a improvement, recovery in demand at the start of the year. That's brought about higher production, that's brought about higher employment, and that's brought a renewal as well in terms of inventory building. So all of this have contributed to the latest number. Now, as you've mentioned as well, a lot of this has to do with improvement in demand both domestically in the Philippines and also externally outside. I think it's important to point out that we are seeing some of this really coming through, not just perhaps for the Philippines, but as well for the whole ASEAN region, in the sense that there is this kind of stronger demand at the start of the year that's carried through from the resilient 2025 that we have seen. And I think that's a bit of a promising sign in terms of telling us that the first quarter growth is going to start aligning towards what we are projecting.
It's also good to point out, Jingyi, that the overlay here amongst the 5 indicators that's bumping up against is really corruption. The corruption scandal, as well as maybe weather disruptions. So how are you weighing in on these? Because we're coming from these factors, if you will, from the November and December readings we've had before this jump up to 52.9.
No doubt, Kadi. So the number itself is a month-on-month growth. So I think we have seen quite a weak close to the Philippines' fourth quarter in 2025. So this is actually showing things picking up momentum again domestically. But as I mentioned, I think it's not just for the Philippines that have seen a strong start to the year. If we look across to the other PMI releases this morning for the ASEAN region, for some of the North Asian economies as well, including the likes of Japan, Taiwan, South Korea, those have also seen a stronger start to the year. To some extent, I think, electronics that still continue to be, that demand is still there. But of course, on the domestic side, I think the pickup in production following the factors that you've mentioned has certainly played a important part, I think, from what we have seen. We do have to talk a little bit about the future output index that's a little bit subdued. So if I could expand on that, I would say that, we did see the second weakest reading since in the survey itself. The weakest itself actually was the pandemic. So the weakest sentiment since the pandemic. And I think this is important to point out because while on the ASEAN side, I think there's a bit more optimism. I think what the Philippines trend is a lot closer to other North Asian neighbors, including the likes of Taiwan, South Korea. So from that perspective, we are seeing that some of the concerns have certainly lingered over the rise in terms of geopolitical uncertainty, such as with the US. So that some bits of front loading may still actually be present given the concern that what this geopolitical uncertainty and trade tensions still lingering could mean in 2026.
Right, and that's pretty critical. As you mentioned, the future output orders, the governor, Eli Remolona, has made a mention of how important it was to track the negative output gap. I mean, we're just coming from 4Q and full year 2025 GDP. They disappointed in a big way, but those are lagging indicators. What then now is the negative output saying, and that gap is saying about the future PMI output?
Indeed. So that index itself is quite an important one because typically we don't really see that gap opening between actual and future output. So from that perspective, I think it's still sounding a bit of alarm as to how resilient the growth itself is going to be. But for what it's worth, if I could also just highlight as well S&P Global Market Intelligence, our forecast for GDP for the Philippines in 2026 is actually a stronger 5.5%. Trust is a little bit on the high side, but with that being said, we still look to a lot of this, we just mentioned as well, the likelihood of rate cuts. We're penciling one imminently for February and also in April itself. That's going to help show up some of the confidence. But over and above that, I think even despite the lowering of target of infrastructure spending, we are expecting that to also actually help show up that 5.5% growth we are projecting. So from the short-term trend, we're definitely going to keep watch on the PMI numbers, particularly if confidence could actually be buoyed up in February with potential rate cut that we are penciling in. But overall, I think we did have, at least on the actual output side, a good January so far.
Well, let me pick up on confidence because that's really key in this reading. I mean, business confidence in December looked pretty optimistic but cautious. But right now, that seems to be the key worry as to how it's going to hold up.
Yeah, definitely, Katie. So this is definitely reflecting sentiment on the floor. As we mentioned, the concerns spread across not just what could be a domestic production trend itself, but also externally, the factors are actually very heavily weighing on sentiment. But let us recall that January has been another month where geopolitical concerns have actually spread across the globe. Then on that end itself, I think that's something to take note of. But what's, I think, as well that we have seen, as I mentioned, the employment index, there was a renewal in growth of employment. So the businesses themselves are worried, but they're still hiring. They are starting to buy inputs again, input product for their production again. So I think on the actual ground itself, the PMI sub-indices are showing that perhaps they are not altogether pausing that. If the employment index does not pick up alongside demand, if the stocks of purchases are not picking up, that's when we are getting a little bit more worried. But I think right now, it's more of a wait and see, Kari.
A wait and see, but they're hiring. I mean, on the employment side, we saw some stabilization last December, but that was because of seasonalities. So what do you think is driving that? If they are hiring, and as you say they are, what would be the key drivers then?
Well, the numbers that we actually publish are already seasonally adjusted, so they are not driven by seasonal factors, even though it's the start of the year. What we did see in terms of what they have been telling us from the comments are that due to the fact that there's higher demand at the start of the year and also the higher output at the start of the year, and that has driven them to actually increase their capacity to accommodate to that. Well, to some extent, yes, employment could be a little bit of a lagging indicator as well. But what we do see with the stocks of purchases as well is that they have also picked up buying of the inputs again. So I think that's a bit of a promising sign, at least, that in terms of the inventory, they are actually starting to rebuild that a little bit into the January month itself. So from that perspective, I think it is telling us that they are still willing to invest to some extent, even though they are worried about how much production growth could actually materialize in 2026. And on that note itself, we are actually expecting industrial production to recover in this year after a weak fourth quarter. Kari.
And you did make a mention of the rate cuts coming forth. Could there be a chance that the rate cut next on February 19th be 50 bips and not 25?
Well, for right now, we're still seeing, at least what we're penciling in at this point of time, is going to be more spread out. We're going to have one in February and perhaps one in April as well, as the economy looks to recover in that sense. I think it's going to be a bit more moderate from what we're seeing based on the current economic readings, Kari.
All right. Pretty encouraging figures so far. Thank you so much. Check back with you in a month. Jing Pan of S&P Global Market Intelligence live from Singapore. President Bongbong Marcos assures the public that he is in stable condition and steadily recovering after recently limiting public engagements because of health concerns. In his latest vlog, the president said doctors have ruled out any serious illness, explaining that he only needs to rest and time to regain strength after losing weight during his recovery. The president also laid out his policy priorities, stressing the government's rules should ease daily life, improve health care, and remove red tape. He added that reforms will focus on digitalization, healthcare access, and making government transactions faster and simpler.
Makikita mo sa mga pulisiya ang mga pinapahalagahan natin na ating bansa, ang disiplina, ang seguridad, kalusugan, at iba pa. Dito sa ating bansa, marami pang pulisiya ang kailangan natin baguhin at rebasahin. Nakikita natin sa balita at naririnig natin ang mga kababayan natin ang kanilang mga reklamo.
You're You're watching Money Talks. Coming up, the ASEAN Business Advisory Council aims to secure deals in agriculture and electronics this year. My conversation with ABAC member George Barcelon in a few minutes. Keep it here on One News. Welcome back to Money Talks. I'm Cathy Yang. U.S. President Donald Trump's nominee for Federal Reserve Chairman is expected to make sweeping changes on the central bank. Investors will keep an eye on former Fed Governor turned critic Kevin Warsh, who previously said the Fed needs, quote, regime change to keep the central bank moving for 100 more years. Warsh supported higher inflation rates during his time as Fed Governor from 2006 to 2011. But in recent speeches, such as this one from April 2025, he has advocated for lower rates, coming in line with Trump's point of view. Warsh resigned from the Fed in 2011 over its quantitative easing policies or the practice of purchasing U.S. Treasuries to inject liquidity into the global financial system. He argued that these measures laid the groundwork for the inflation surge seen during the COVID-19 crisis. Warsh aims to downsize the Fed, which has over $6 trillion in assets, and articulate an aggressive inflation plan despite his disdain for mainstream macroeconomics. As for the president, he hopes to see lower interest rates and worries about the Fed's independence.
I hope he's going to lower them. I mean, if you watch him on television, because I watch interviews and statements, I hope he's going to lower them, but he's going to have to do what he wants to do.
Did he tell you? Did he make any commitments?
No commitments. I don't want to do that. I couldn't do that, I guess, if I wanted, but I didn't do it. I based it on quality. I mean, he was a very high-quality person. He should have no trouble getting through.
Checking in on the markets, U.S. stocks dropped Friday following Trump's announcement of Warsh as his nominee for Fed chair. The Nasdaq tumbled by nearly 1%. S&P 500 slid by 0.4%, and the Dow declined by 0.33%. The benchmark 10-year Treasury yields ticked up to 4.24%. Gold prices suffered their steepest one-day decline since January 1980, closing at $4,713 per ounce. Silver plunged by 31% to settle at $78 per ounce, its sharpest drop since March 1980. The dollar posted its strongest day in months after Trump made his pick, catching investors off guard by the massive sell-off in precious metals markets. U.S. futures pointing to a mixed bag when the markets open tonight, Manila time. The Dow is up by less than 0.1%. The Nasdaq falls by 0.25%, and the S&P 500 slides by 0.1%. Asian markets trading mixed this Monday, with Japan's Nikkei 225 rising by 1.25%, South Korea's Kospi falls by 0.6%, and Australia's ASX 200 slides by 0.5%. And a quick check on our own markets. This first trading day of the month, the PSEI opens this Monday higher by 0.1%, 6,339. The stock market rebounded last Friday by 1.7% amid lackluster GDP figures. Analysts see investors remaining on the defensive mode this week while waiting for key economic data sets that will set a clearer direction. As for the Philippine peso, it opened today a tad weaker, 58.90 to the dollar. The peso strengthened by 8.5 centavos last Friday to close at 58.86 against the greenback. Traders say the peso may be range-bound ahead of the January inflation release. The 10-year government bond yields ticked down to 5.987% from the previous close of 6.011%. Here's a roundup of the corporate news this Monday, February 2nd. The Energy Regulatory Commission has approved Meralco's petition to continue sourcing power from First Chance gas-fired power plant in Santa Rita, Batangas for 5 more months. The interim extension is valid until June 25. The renewed arrangement will remain a pass-through charge to Meralco customers. The ERC made the approval as spot market prices would increase twofold if the Santa Rita plant were to operate as a merchant plant, given that the summer season is approaching. PLDT Enterprise, the corporate business arm of PLDT, has renewed its partnership with Zamboanga del Norte Electric Cooperative. Zaneco will continue accessing PLDT's iGate solution for reliable internet connection, even during emergency power shutdowns. And through Smart's messaging suite, Zaneco can send real-time advisories directly to its consumers. PLDT and Zaneco have been partners since the early 2000s. And Tanduay is eyeing to expand its footprint in Central and Eastern Europe markets. Tanduay International Business Development Manager Roy Christopher said last week that the popular rum brand is targeting Slovenia, Slovakia, and Hungary. Tanduay already debuted its premium rum portfolio in Denmark last year. The ASEAN Business Advisory Council aims to secure deals in agriculture and electronics this year, with the Philippines taking on the ASEAN chairship. ABAC member George Barcelon says tighter collaboration between government and the private sector is a good starting point to addressing foreign investor concerns over unresolved corruption and governance issues. Here's an excerpt of my thought leader's conversation with Barcelon.
The issue on, of course, it's very much highlighted. It's still in people's mind. Okay? But if you, the theme of this ASEAN for the country is navigating the future together, okay, and inclusive growth for all. Now, having stated that, it's imperative for us from the government side to show their sincerity in rebuilding the trust of the business sector. It has been tarnished with what had happened, but I can see that hindsight, looking back, this thing was exposed by the president himself. So it's we are cognizant of the fact that he knows the gravity of what had happened, okay? And also he instilled, or he set up the proper investigation committees to work on this. But of course, the law, they have to follow certain laws provided in dealing with such matters. So we leave it to the wisdom of the government that they will be able to present to the public, okay, that something is being done. And that would very much regain that confidence that was shaken. Okay. Now, going back to the ASEAN, we have this opportunity to host this 59th Business ASEAN Affair. And we on our side, the three of us, Chairman Joey Concepcion, myself, and Mr. Michael Tan, we are all, and plus the various government agencies, we are all in one mindset that this is our chance to put our best foot forward. When you have visitors coming from not only the ASEAN countries, but also some of the countries in the G7. And we still are optimistic because there's a lot of upside in our country. Primarily, we have a well-educated population, which is more around the vicinity of 120 million. We're not a small country. And our demographic, advantage is we have a young population.
Catch my full conversation with Philippines ABAG member George Barcelon on this channel and on our social media accounts. And before we go in sports, the Signal Super Spikers kicked off the 2026 PVL All-Filipino Conference with a dominant sweep of the Galleries Tower high-risers. Signal controlled the match from start to finish, including a decisive 14-4 run in the third set. Tin Tiamzon led the charge with 18 points, coming from 10 attacks, 2 blocks, and 6 service aces. Meanwhile, the reunion of Ea Laure and CC Rondina also got off to a winning start as the Choco Mucho Flying Titans overpowered the Akari Chargers. Rondina starred in her return with 16 points, built on 14 attacks, 1 block, and 1 service ace. Congratulations, ladies. That is it for Money Talks. I'm Cathy Yang. Catch us again tomorrow at 9:30 a.m. Kapatid, we are One News, all sides, all the time. Have a great day ahead.